Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock. With news, we're ending the week waiting in a risk-off mood where commodity currencies like the New Zealand dollar are being hit ahead of the key US jobs report and inflation-averse central bank officials. Last week, there were 167,000 new jobless claims in the US, a small rise, leaving 1.2 million people on these benefits and remaining near an all-time low level. Separately, almost 30,000 job cuts were reported in the US for September. Even though this is a 3-month high, it's only a very small rise in the context of the size of their labour force of 153 million people. Labour market data is front in minds in markets today because we are waiting on the September non-farm payrolls report, which will be released this time tomorrow. It is expected to report an expansion of 250,000 new jobs and more for private sector payrolls. And China may be on holiday, but they remain active in international bodies. They've successfully convinced the UNHCR not to debate or even talk about Xinjiang abuses. As a lender of choice for many countries over the past decade, Beijing now has the power to cut them off, lend more or forgive some of their debts. Debt is a powerful weapon. But it can cut both ways. Overseas money continues to flow out of Chinese stocks and bonds as a rapidly cooling economy there and interest rate shifts drive investment to other destinations. Foreign investors' holdings of Chinese bonds fell for a 7th straight month in August, dropping by $150 billion to $870 billion. This bond market outflow is the biggest in data going back to 2015 and comes as the world's second largest economy suffers a dramatic loss of momentum. EU retail sales came in weak. They reported on a volume basis, ignoring the effects of inflation, and they were down 1.3% from the same month a year ago. And German factory orders fell sharply in August in new data out overnight. They were down a troubling 2.4% from July, down 4.1% from the same month a year ago. Global passenger air travel seems to be recovering very strongly, and global air cargo volumes dipped in August but are being called resilient because they are only 3% lower than pre-pandemic levels. There were more big falls in shipping freight rates for containers by sea last week, down another 8% in a week, and putting the spotlight firmly on the struggling trade to and from China. The US Treasury 10-year yield starts today at 3.81% and up another 5 basis points from this time yesterday. And the price of gold will open today at $1,712 an ounce. This is down $3 from this time yesterday. And oil prices start today unchanged from yesterday at just under $87.50 a barrel in the US, while the international Brent price is $93.50 a barrel. The OPEC announcement of a sharp supply cut seems to have little price effect so far, which is somewhat surprising. Analysts are still expecting that to happen, but it is interesting that the markets aren't pricing it in yet. And the Kiwi dollar will open today at 56.6 US cents and another 0.5% lower than this time yesterday. Against the Australian dollar, with little changed at 88.2 Australian cents, and against the euro, we're a tad softer at 57.7 euro cents. That all means our trade-weighted index starts today at 66.9 and 30 basis points lower than this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.